You're watching Famous Dave on YouTube.
All right, thanks for that intro, and welcome to the Short Vol Show Live. My name is David, broadcasting live to you from beautiful Cape Cod, Massachusetts. And just before you continue, if you haven't clicked that subscribe button, please feel free to do so. Thank you for Patreon supporters. And let's just get right into it because it is a busy day for the markets already, and stuff is down. Now, with a show called the Short Vol Show, this wouldn't traditionally be a great time for money-wise for somebody who's shorting volatility, and many of you may find yourself in that situation today. My advice to you is to compose yourself and hopefully you have some ability to maneuver around right now. And if you don't, then you need to change something with that. I would recommend to anybody today who's trading that with a down move comes opportunity. Now, we don't know what's going to happen next, as usual, but there is opportunity here, in my point of view, to scale into some sort of short volatility position. We are in backwardation. We are in a spike. These are the moments we wait for to enter some sort of position. This is one of those moments where you buy when everybody else is selling. You sell when everybody else is buying. If you are to go on forums right now about volatility, you will see people slapping 5 to each other who were long TVIX and they made a bunch of money today, or long UVXY. What they don't tell you is all the other times when they're sucking wind long volatility. The bears in the market will be out in force today. You'll hear people saying, I told you so. I mean, you get that in any sort of market, but certainly today there are people who once a week call the top of the market. These YouTube videos come out all the time from people saying, the signs are there. The zombie apocalypse is coming. Stockpile duct tape and get ready because, the time is near where a bag of silver coins is going to be able to buy you bread, and there'll be no other way to get currency because everything else is going to melt down. So I'm here to give you a little bit of perspective, hopefully, coming into this situation. And I do believe that there is an opportunity here. There's always opportunity in situations where stuff is moving around. And so the key is, how do we take advantage of that opportunity? And usually when we get a spike, it only lasts for less than 24 hours. That's what statistically usually happens. Will it be like that this time? I don't know. I can't predict the future. A spike can go on for a very long time. Just to give you, once again, some perspective, let's take a look at the charts from last year. And we're going to see a quite long period of spike where if you had shorted volatility, you would have had to wait a long time for it to be profitable. So if we go over here to the chart, and let's widen this out a little bit. All right, so here's the chart, and if we go back to the first quarter of 2018, you can see if you had sold VXX, you could have sold VXX at, let's say, 29 here, and it would not have been profitable until October, and then it just would have been profitable for a minute, and then it would have not been profitable again. So essentially, if you'd sold VXX over here at 27, you would have had to wait a year to make money. Okay, so that is the worst case scenario for selling volatility. Is you pick a place, and even though this stuff's decaying, we know VXX goes down over time. If you look at long-term charts, you know it's going to go low over time. But if you pick the exact wrong time, you may have to wait a year for it to go lower. And that's the situation we had back in 2018. Could that be a situation that starts right now, where if you sold it right now, if you sold VXX 13, let's say you sold it 1350 a couple days ago, will you have to wait a year for it to be a profitable trade? Well, it's unlikely, but there is a possibility there. That's why we want to always be prudent, and we want to give ourselves enough time to for our trades to work for us. So we've had a pop, but in the grand scheme of things, the pop doesn't look that huge. Even if I back up, let's back up to a year chart here, and VXX right now is 14. What is it? I'm sorry, 1539. But 1539 in the grand scheme of this chart doesn't seem that high, right? We could see this go higher, certainly. We could see it go to 20 or something. However, this spike, when you compare it to other spikes, usually spikes don't last very long. So this could be a monumental opportunity to get short volatility. However, it also could happen that this moves higher before it moves down. This could be the start of a several-day move up. We don't know for sure, but when we look back in time a little bit at this chart, you can see we had a couple false starts. Remember that? Just a couple weeks ago, we had a situation where it was a base had been attacked. A U.S. base had been attacked and nobody was killed. They gave warning and the president came out with a very measured response. And the markets were way down after the close. But by the next morning, everything seemed to have cleared up and the markets were back up again. That was sort of a false start. We had, after this expiration, all of a sudden, contango way less than it had been in a while. Contango flattened out. Now, contango not predictive, but the sum of all of these little things gives you some indication. Unlike a lot of my co-educators, am not a huge indicator person. A lot of times my trading intuition or my spidey sense goes off, and I'm not sure why it goes off. That's one of the reasons I tell people not to follow my trades, because all of a sudden I might reverse out of something and you don't get the news. And if you were just duplicating my trades, maybe you didn't get out. That's an example here with what happened recently, is that I actually bailed out of my positions last week. I didn't put a video out, and you wouldn't have known that. So if you've been just duplicating my positions, you wouldn't be duplicating my P&L. That's why, of course, I suggest everybody thinks for themselves, has their own positions. I think you can still benefit from me and my channel by watching what I'm doing, and my execution can help you, but you always need to have your own ideas. So what to do today if you want to scale into a short vol type position? Well, I would wait until things settle after the open. Now, it doesn't appear that we're going to pop right back after the open. Once again, I don't know what's going to happen, but when we looked last night, if we look at the action overnight in the E-minis, for example, and I'll get out of the way once again, we see that we are off the lows, but we're not in like a continuous rally off the lows. Sorry, that's the wrong chart. We came off the lows. The low here was 32.44. We came off the lows. And then now we're kind of fading back lower again. So it's not like the market's coming back. No, it's still kind of meandering lower. Same thing when we look at the NASDAQ. So, and like I said, everybody online is going to be saying this is the end of the world. This is the end of the market. So my suggestion would be to scale into some sort of short. If you're looking to short volatility, I wouldn't use all your bullets right here. Now, if you do nothing, you're going to regret it if tomorrow all of a sudden the market's right back up again. However, if you use all your bullets here and then all of a sudden tomorrow VXX is trading 25 or something, you're going to be mad at yourself too. But I would do, if you are interested in shorting volatility, I would do something today, and I would. If you were trading options, which is what I do, I would wait till the dust settles a little bit after the open and see where we are. Now, for example, my position that I got out of last week was these out of the money puts. So let's look at those just really quickly here. They were the 15 Jan 2021 7 puts, and I sold them at 59 cents. Now they're going to, right now the market on the close yesterday was 53 cents at 61. That's very wide, but these are obviously going to open lower than they were. But I would suspect that market makers will crank volatility in the VIX products today. Now the reason for that is they know that retailers were going to want to come in and buy puts. So you want to be very careful. Let's look at UVXY also. Okay, UVXY on Friday, if we look on the very right of the screen here, you're going to see the implied volatility levels, which I'm pointing to with my arrow here. And we're showing like 115. It's showing the front week 130. Now these are kind of on the high side for UVXY. If you're curious about option statistics and you're in Thinkorswim, you can go to this section here. Right now I'm under trade, all products. You can go to today's option statistics, and this stuff doesn't always update totally right, but it's showing current implied volatility percentile 60%. But I would actually look at these other numbers here. We see 52-week IV high. Now, when it says IV, implied volatility, that means option price level. And so it's showing a high volatility of when it says 1.38, in my mind, I would say that would be 138 vol. I'm not sure why they put the decimal that way. So it's saying over the last year, volatility in the options has ranged from 79 to 138. When we look at the screen, back at the screen here, and we see the listing, we see front week 141. Then we see the back weeks a little bit lower, 115. But it seems reasonably high in the range. It's not super high in the range, but I would suspect these numbers to open higher today than they were on Friday. And that due to, once again, we're in a spike. They're going to crank this stuff up because they know, if anything, people are going to come in to buy puts. They're not going to come in to sell puts way up here unless the stuff is cranked really high and you've got a really savvy really savvy trader who says, oh, volatility is really high in these puts. I'm going to sell puts and I'm going to short VXX or UVXY against it. But in general, you get option buyers, you get people looking to buy calls and buy puts in this environment. So I would look to see these implied volatility levels higher. So if you're looking to buy puts during a spike, having volatility in the options very high is not going to be useful to you, because as soon as the spike's over and these things move back down, they're going to crush volatility. So what does all that gibberish mean? It means that you want to be careful if you're buying puts that you're not paying too much for them, because you don't want to be in a situation where the put that you buy with UVXY up around 13 is trading the same price with UVXY down around 10, and you make no money. You don't want to be in a situation where you're right in the direction of UVXY, but you make no money because the implied volatility of the options you buy gets crushed. And that's a very real thing that happens to people all the time. I was just watching a forum yesterday where somebody was saying, help, I bought these calls in a stock, and I was right, the stock went up, but I didn't make any money. What happened? Well, what happened is you paid too much for the calls. Picking an option, saying, well, I traded this option, I either bought or sold this option, you can't say if that's the right thing to do or not. What matters is what price you're paying for what option. I'd be willing to trade any option on this screen for the right price. That's what being a market maker is. You're willing to buy something for one price and sell something for one price. So you want to be cognizant of what price you're paying for stuff. Now, one way to quickly avoid and allay that sort of situation is to buy a spread, because when you're buying a put spread, the option price doesn't matter that much, because you're buying one option and selling another. And so if they jack the prices way up, then the option you're buying price is jacked up and the option you're selling price is jacked up. So they offset each other. So a spread might be a good thing to do in this environment. If we look at UVXY right now, it's jacked up. We see this pop up. Now, could it go higher? It certainly could. Will it go higher? There's no way of knowing. What we do know is this is a better price to short volatility than than 2 days ago. And I know that sounds obvious, but sometimes the most obvious things get missed when we're all excited about trading, right? We're all excited. Oh, it's an opportunity. Oh, everything's moving around, and you sometimes you need perspective. The best way to get perspective, if I'm staring at the minute by minute chart and I'm in the moment watching stuff, the best way to get perspective is just to back your charts out. You're looking at a 30-minute chart. All right, well, let's go to a chart that is an hourly chart or a daily chart. Let's get some perspective. Here's the perspective here is that UVXY is back to the level that it was at the beginning of Jan. Now, that's not that long ago, right? That's only 24 days ago. But it's back up to this level. Now, it would be more impressive to be able to say, oh, I sold UVXY when it was back to the level it was, last year at this time. However, this is definitely a better spot to sell it than it was before. But you want to have perspective. Is this an awesome sale? No, but it's much better sale than it was a couple days ago. So that's the kind of perspective I'm talking about. I want to just pause to thank the Patreon supporters of this channel. I have all kinds of kind words from people. The best way to help out this channel, if you want to, is to become a Patreon supporter. It only takes $1 a month to help out and support the channel here, and I really appreciate all my Patreon supporters who've stuck with me. Sometimes I'm making tons of videos a week, sometimes I'm not making that many, and people have stuck with me. So thank you to all my Patreon supporters. There's no rush, I don't think, today to sell volatility. So this is a great opportunity here, but be prudent and be careful about it. If you were short already and you've lost a little money here, hopefully there is some time. If you've got something that's going to expire soon, you can consider rolling it out. Remember, this stuff always goes lower. It will go lower again. It might seem like it's the end of the world if you were short and it went against you here, but it's not the end of the world, and this stuff will come back. To go ahead and cover your position right now, if you were short way down there, doesn't make sense to me. Like I said, the odds are that this stuff's going to go back down within 24 hours. Now, the odds cannot work in your favor sometimes. Sometimes stuff just doesn't work out, but the odds are that stuff will go lower in the next 24 hours. So keep that in mind. I wouldn't be one, if I was in the situation where I hadn't gotten out of the puts that I was long, I would be in holding here. I'd be holding and just waiting for it to come back. If you're short and this is a disaster for you and you're really upset about it right now, let this be a lesson to you that sinks into your head so that this doesn't happen to you again. If it costs you a couple bucks, but it's a lesson that makes you a better trader moving forward, maybe it's worth it. I've been in this situation before where I was short volatility, something like this happens, and I'm so upset, not as much because I lost a little money, because I know that will come back, but because I don't have the ability now to take advantage of the situation. You don't want to give up all your bullets, and you want to be able to, if you sold essentially UVXY around 11 here, it would be great to sell a little more around 13, because then your average price is up around 12. Now, when we're talking about like trading stocks, I don't believe in like doubling up if a stock goes lower. So for example, you buy a stock, you pay $5, now it's $3. I don't believe in buying more. I believe in either getting out or holding. However, with a product like a volatility product, a volatility ETP, where you know that mathematically it has to go lower over time, then it's a little bit different calculation as far as to adding to your short. So that's some stuff to think about. I do have a special guest coming on later in the week for you guys. Hello and good morning, Manfred. Thanks for coming on. Let me just say hi to everybody in the chat. Thanks for watching today. I know it's kind of an anxious time, but there's also opportunity here in the markets, folks. So take advantage. So once again, my plan today is to wait until stuff settles a little bit on the open and then look for ways to get short VXX. And most likely it's going to be either buying a put spread or buying out of the money puts. Now, a spike like this allows you to roll up which strike you're dealing with. So for example, I was trading, before I was trading these out of the money puts in Jan, I was trading the Jan 7 puts. We get a spike, maybe you can buy the Jan 8 puts or a strike higher. The same thing with UVXY. When we look at UVXY, let's just look at a spread that I would be interested in trading. And I'm going to go out to March. March is probably the closest I would trade here, but we're up around 13. What about like the 13.10 put spread in March? Now, once again, you want this to make sense. The pricing, that's a $3 put spread. How much do you want to pay for a $3 spread? Well, if you paid $2 for a $3 spread, that would give you a great return on your investment. If that gives you 2 months for UVXY to basically get back to where it was. That is pretty aggressive, but also not that unlikely. Better yet might be even to just move out even farther from March out to June. Similar spread. Remember, chasing these returns of like 50%, although it would be great to make 50% in a move like today's, is not as realistic in the real world. In the real world, as a trader, we would love, love, love to make 40% in a year. So think of it that way. If you can pick a trade that a year out would make you 40% in UVXY, right? So, or that's just an arbitrary number I pulled out. But instead of if you're looking at March to trade a put spread, whatever you're looking at, move out another month. Give yourself that extra amount of time for this stuff to work. I found that the most successful people trading these products are the ones who are less aggressive, look for a little bit lower return, look for a little bit less risk. So do that for yourself. I want you folks all to make money. I love hearing stories of when you guys make money. So best of luck to you today. I'm going to let you go. I know it's a busy trading day ahead of us all, and you have to get on to the activities of the day. So thanks for watching, and I will see you in the next video. Please don't forget to smash the like button. Smash that button, as Davey504 says. Smash like, smash. Thank you. See you next time.